Right, come on in. If you are watching on the replay, you could just fast forward through the introduction, waiting for the live studio audience to come in. Got the new year coming in. We had an amazing year in 2025. So what are the stocks that will make us rich in 26? That's what we're going to find out as soon as we get the live studio audience in here. As always, as is the case every week with my 10,000 global followers, I am Money Mark, a 30-year veteran of internet and AI stock research. I was an analyst for hedge funds, mutual funds, investment banks, Wall Street in general. Until 2024, I worked for a company in the industry, and then started my own company in 2004, retired in 2008, and in the beginning of 2009, started blogging my picks for the general public. No more for the fat cats. Charged money to the fat cats, got rich, and now I do it for free for mom and pop America, you and me. So, let's see here. Let's get in. Let's validate and verify that we've got audio and video here. We do. And we got to get a little bit of an audience, y'all. We got to get a little bit more audience. By this point, we have more people logged in. We are going to talk stocks. We are going to talk AI. We're going to talk tech. We're going to talk the same things we always talk about. Why? Because it works. We had a massive year last year. While we're waiting, you guys share the live, share the invite so we can get the numbers up. I'm going to give a little bit of filler until we get there, right? Here are the results of the official portfolio going back to May of 2024. So we're coming up on 2 full years without a single negative return on any of our official picks. That continues going into this year. For those, while we're waiting for the veterans to share the invite, a little slow start to this year. It's okay. I understand some of y'all ain't even around, out on vacation, whatnot. So we're not going to be too crazy about it this week. But do your part, right? Because I'm here for free. All I ask is that y'all spread the word. Now, by the way, for you newbies out there, we'll do this one little repeat. We don't do this spiel every week. There are 3 things you should be looking for in somebody who gives you stock picks on the internet, because there are 10,000 clowns out there trying to convince you to buy their pick, and 99% of them do not have the credentials, the education, the experience to do a real analysis of what a stock is really worth. This isn't just some casino where a stock can go to any price. I mean, it can, but that's gambling. We break it down into a science, the actual business. What made Warren Buffett and Stan Druckenmiller rich and famous is knowing the actual math, the actual process of analyzing a stock. It takes decades. Those 10,000 clowns don't have it. And that's why they don't give you, number 1, their real name. Mine's right here at the top of this page. There 2, their real credentials. Mine are hyperlinked, so you can see exactly who I am, how I've been quoted in the media in the past, where I worked, the calls that I've made, and a real-time, as I already showed you, tracker of my official picks. The 10,000 clowns don't give you those 3 things. Almost none of them do. Why? Because they don't want you to see that. It's nothing for them to brag about. Now, that having been said, when you are listening to somebody who does it different, somebody who actually does it professionally, it's not going to sound the same as those 10,000 clowns. So there's 3 things that you should check out from what I provide to you. By the way, there's no tricks. There's no sponsorships, no advertisements, no nothing. None of that stuff. This is really just me giving 2 hours of my time every week, and I provided some educational materials. We call it the instruction manual on how to understand and interpret what a real stock analyst actually talks about. Okay, so number 1, you can go to my Twitter, my X page. It's Money Mark Stocks, right, is the handle, and listen to this. And then you can go to my blog site, markgomestocks.wordpress.com, and read this. And then you can go to my YouTube channel, which you're on right now, and watch this. So read, watch, listen. It's going to take you all of 2 hours to get a 30-year education as much as I can give you. I can't teach you how to do what I do in 2 hours, but this will make it so that you understand what I'm talking about on this show. So if there's anything I talk about on this show that you don't understand, it's because you haven't watched, listened, and read. You can go back and do that later. We're going to have green lines, red lines, white lines, all that stuff. You're going to understand the lines, risk reward, cylinders that companies are operating on, the fundamentals that actually give you the cheat code of what a company is actually worth, so that you know when you buy in, you can use the charts. You can use technical analysis, but how much more powerful is it when you're using technical analysis on a company that you are confident, that you know is worth fundamentally more than what you're paying for it? So that even if the technicals break down, you're like, well, the stock is just cheaper now. Not that it's just going to go down to 1 or 0. Okay? Pisses me off that people do that to y'all out there. And by the way, we now have the audience that we need. We now have hundreds of you out there. So that's beautiful. And y'all veterans, you know what that means? That means it's Friday. It's Money Mark, and it's Stock Talk Live. Happy New Year. It's 2026, first episode. Let's get the disclaimers out of the way. This is on the screen right now. If you are watching or listening to this, you acknowledge that you have read or had somebody read to you these disclaimers and understand, right? This is all for informational purposes. I'm not giving you any picks. In fact, in these disclaimers, I tell you not to act on anything I say, because I want the right to act on my own at any point in time. I am registered as a day trader with the IRS. I take advantage of market moves, so I don't want there to be any thought out there that any market move is because of Mark. So don't act on anything I say in this show, because I want to reserve my right to act on any moves in the marketplace. And like I said, you've read the rest of this, or don't continue watching this show. Blah, 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 blah. We got to do that, folks. Andrew left. They're going after him hard. And I don't want to be among those people who get attacked by the SEC. I don't know if Andrew's guilty or not, but I just don't want any of that noise. By the way, here is that. We already went over this. All right, we've had great picks this year. Some triples, 1, 2, 3 triples, one close to triple. We closed it out before a triple. That was cracking. That went on to more than triple, by the way. So hey, you know, if I had hung on a little bit longer, we would have gotten a triple out of cracking. But that's not what we're here for. The risk reward lines, we hit the top, right? And this is different than what the pumps do. I look at risk reward, and once we got to the risk reward highs, I said, okay, fundamentally speaking, the risk is starting to get high relative to what I can ascertain about this company. I still own some of this stock, and the rules say you can do that, right? Go read, listen, watch those items I said at the beginning of the show, right? And why? Because, as I've said for months, if there is any risk reward line where I feel like I might be underestimating where this stock can go, it's cracking. And here you go. The stock continues cracking. It's now 485. Whoa, when did we get into cracking? 70 cents. See, and this is proof to you. Among other things, there's plenty of proof out there. You can look at my tracker. You can look at the stocks. In fact, I'll show you in a second the performance. Last year, on January 3rd, I closed out a bunch of names, but told you I wasn't ceasing coverage. It's just that we had a bunch of names in this official portfolio, and I wanted to kind of start the year fresh. Okay, so we cleared out a whole bunch of names. They had done well already. And I said, it doesn't mean I'm negative on these stocks. It just want to consolidate things down. It's like house cleaning. It was spring cleaning. Beautiful. But check out what happened. In addition to Kraken continuing to go up after I ceased coverage of it, right? These are the names that I ceased coverage of on January 3rd of last year. And out of these names, almost all of them, only 3 out of 12 were negative on the year, but the average, which is the most important, 44%, plus 44%. on the names that I cut out of the portfolio on January 3rd of last year. What does that tell you? It tells you that the names that I pick, they're good companies. They're fundamentally strong. They have good valuations. The risk reward, even though it gets too high for my liking, I'm super picky. I'm looking for 10s. Even after I stop coverage on a lot of names, they continue going higher because they're great companies. And that's what happens when you pick great companies and, more importantly, at a great price. And that's what the 10,000 clowns don't know how to do, is ascertain the right price to pay for a company. That takes decades. I went to 5 years of school, 6 years, including CFA schooling, and that didn't come close. Okay, I finished with honors at Northeastern University, did CFA studying, and was a joke. I was an absolute joke at that point. I know, because now I know what I'm doing. Back then, no. College didn't teach me nothing. The CFA program, it taught me some basics of accounting, but not how to research a company properly. That took 10 more years of mentorship from somebody that was already there and already taught by legends. Okay, that's what you're dealing with out there. So just understand that if you're doing this on your own, you're kind of throwing darts at the board unless you have that experience and unless you're listening to people with that experience. And most of them out there are trying to grab your money, grab your eyeballs. No, not me. I'm here to warn you. Colleges, rip off. CNBC, rip off. The 10,000 clowns, rip off. Enough. Let's get into stocks, because you ain't here to hear all that. I'm going to leave that for next time. That's just a little, somebody gave me some kudos. I don't need that right now. We got a show to handle. By the way, at 3 p.m., I'm going to answer all your Q&A. So if you have questions, put them in the chat. Put a question mark at the beginning of your question. That makes it easier for me to see. And by the way, since I do not charge any money, give any sponsorships, no advertisements, no subscriptions, no nothing, all I ask is that you help spread the word. And how you can help spread the word is give me the thumbs up. You don't have to hit the subscribe and notification bell, but that's for you, because sometimes I do go live on days other than Friday. Okay, but give me that thumbs up, put a comment in the chat. That all helps the algorithm. That's all I'm asking for. All right, let's go. Fear Greed Index. We're going to start with a macro. For those who don't know already, this is just going to be really quick, and then we're going to get into the stocks. I know it starts off boring every week, but hey, that's the way it is. We got the audience still coming in. Fear Greed Index, 44, on the edge of neutral. Okay, and here you see back in April, during the tariff tantrum, I've told you, when we get to single-digit fear, those are the times to buy. Everybody is panicked, including me, by the way. If it wasn't for the rules, I'd be dead, because I do it all wrong. My heart does it all wrong. Without the rules, I can't do this. Okay? I lost money 1, 2, 3 years in a row after graduating college because I didn't know the rules. And even once I started getting told the rules, I wasn't following them because it didn't feel right. Well, how is it going to feel right? We're pack animals. Human beings are pack animals. And when the pack is exiting the stock market, afraid of what's going on, and we're going to talk about Gatekeeper and how people are panicking on that for no real reason that I can ascertain. Stay tuned. When people are panicking, you need to say, I'm going in. Warren Buffett said it himself. When people are fearful, be greedy. When people are greedy, be fearful. Okay? Fear Greed Index tells you how to do that. Look at that. Extreme greed back in July, the market tanked. Extreme fear in November, the market rebounded. Okay? This isn't a be-all, end-all, but it does give you a good pulse. All right, let's keep going. Also, I like looking at this. When yields are falling, all else being equal, if there's no recession, the market should be rising in a falling interest rate environment. And there is no recession in sight. All the macro guys that I subscribe to, I pay for macro research because I'm not a macro expert. So I follow the experts that have proven themselves, that have those 3 things, right? They are all bullish on GDP, on the economy. There is no recession in sight, and we have interest rates steadily falling. That is bullish for stocks. All else being equal, we're going to look at the risk reward charts, and that's the one yellow alert that we have right there is the actual valuations. Because as you can see, the CAPE ratio, you can look this up on your own, right? This is a well-known indicator, all-time highs in terms of CAPE ratio, that all else being equal, not all-time highs, close to all-time highs. Only the internet bubble was the CAPE ratio higher than it is right now. That is disconcerting. That is a worrisome sign. The last time we got up to these levels, the market tanked. Of course, that was the tariff tantrum, and we rebounded from there after the drop-off, but we're back up at those levels. That causes pause in the market. Not necessarily stocks. They're always great stocks to buy, but be careful about the market in general. And then the Buffett indicator, forget it. The Buffett indicator is at an all-time high. You can see in the blue line, right? That's the total market cap to GDP. That is the Buffett indicator. That is at an all-time high. It's never been this high, including back during the internet bubble. And so be careful about this. Is the time to pay the least attention to those 10,000 clowns, because if the market does turn off and go into correction mode, those 10,000 clowns are going to make you lose all the money you made last year. Simple as that. All right. So there's my speech. That's the macro. Be careful out there. Let's look at the market chart, and then we get into stocks. There it is. That's the Russell 2000, very close to the red line. Okay. We hit about a yellow alert back here in the end of 2024 before the market tanked off. The NASDAQ is still in yellow alert territory, but look at that. So congested on that line. It is finding it very difficult to gain any ground above that line. It's just kind of hugging that line. And that's cool. The NASDAQ can go up 11% this year and still be hanging out at this line. But what if there is a 10 or a 15 or a 20% correction in the middle of the year? At any point of the year, then you're going to get a chance to buy back at a cheaper price. So if you think there's a better than 50-50 chance that we're going to get a 10% correction this year, you should not be heavily invested in the market, because the market should only be rising about 11% if it stays up at this risk reward high level. Here's the risk reward low level. And don't think that we can't get to those levels. It looks ridiculous, right? Until you kick it back and realize that during the financial crisis, we got down to that green line level from a much higher base. So something far worse is not just capable of happening. It has happened this millennium, right? And then the S&P 500 above the red line. So I am not an owner. I do not own any S&P mutual funds. I don't own any NASDAQ mutual funds. I am short these indices as a hedge against my stocks. I own stocks. I have private equity funds and things like that. I'm kind of locked into those. If I could, I'd hit the sell button on those, right? But I'll hedge those as well and just ride it out until I can get out of those funds. But those things they've been doing great. Right? And hopefully that continues with those private companies going IPO into this environment. Okay, let's get into stocks. Let's see what we got to lead off. Oh, this is a good lead off. AI, Elon Musk. Those are some hot terms. XAI, one of the biggest winners we had in a long time was TSSI, which I gave y'all in the middle of 2024. It was one of the biggest winners over the next 12 months, going from 2 to 30. I was out at 20. Okay? I ain't going to lie and say that I was there from 20 to 30. I wasn't, right? But so what? That's what risk reward tells. Risk reward gets you in, risk reward gets you out, and then you Sodom and Gomorrah, don't look back. 2 to 20 is fine. Trust me. We did pretty good. All right. That paid a few mortgage payments on this penthouse in Miami Beach that I'm living in. Okay. And not for nothing, but if you rode it from 20 to 30, then you probably also rode it from 30 back to 20 down to 10. Now it's 7. That's what happens. The people that have the guts to ride it out because it's going to 100, right? When it got up to close to 20 the first time, I'm riding it out, and it dropped to 6. And then it gets to 30. I'm riding it out, and it gets to 7. I'm riding it out. And what's going to happen next? That's what you got to be careful of, because if it doesn't come back, then you missed your opportunity to take yourself a 10 bagger from 2 to 20 because you wanted to go for the 100. Guess what? This company is not worth 100. Period. I've been doing this for 30 years. I've been covering technology companies for this long. This company is not worth 100. It is not worth 30. Nothing against the company. I like these guys. Okay? And I think there's a really good chance, and this is what, if you own TSSI, you're going to like this. I think they're going to have a good quarter. Okay? Now, of course, I thought they'd have a good quarter last quarter too, and that didn't work out. And I warned y'all, you don't want to really be playing with this, with anything more than funny money. Right? Last quarter, Q3, was the fiscal year end for the U.S. government. And Dell, TSSI's 97% of their revenue comes from Dell. Dell has a huge federal business. But a funny thing happened on the way to the bank. We had a government shutdown. So all that government funding, all that government spending that typically happens at fiscal year end, September 30th, didn't happen as planned. And so what happens? It gets pushed out to the next quarter, the quarter that just ended on December 31st. And during that quarter, I documented for you on this very show how we had, and by the way, thanks a lot, bro. You know who you are. Go to TSSI's facilities in Red Rock, Texas, in Georgetown, Texas, and kind of spy on the parking lot. Okay? Multiple visits to those parking lots to see what was going on. And what did we see? We saw the place full Monday through Friday into the evening. Even on Sunday at 6 p.m., we saw the parking lot 2/3 full on a Sunday at 6 p.m. Thank you for the read, by the way. You know who you are. That's an indication that things were busy there. Okay, that's an indication that there's a good chance that when they report earnings, which won't be for quite some time, by the way, folks, so be careful. You gamblers out there, if you want to gamble on the quarter, right, you got to figure out the right timing and when you want to get in on that. If they did have a good Q4, though, I would expect the stock probably rebounds from these levels. That's my guess. I do own a little bit of the stock. Again, play money based on the information I have at hand. But we still have the issue, the long-term issue of there being a lot more systems integration capability out there than there was when I picked the stock at 2. Most notably from Dell itself. Go back to my old videos for that. So long-term, they're off my list. I'm probably not going to reinitiate coverage on this stock. Never say never, but I know these situations pretty well, and there's probably a good chance that I never reinitiate coverage on the stock. I will talk about it and give you what I know because I know a lot about it, right? But it's just not an exciting business anymore because there is so much competition, most notably from their largest customer. That's not a good recipe for long-term success. So unless they break away and get more customers other than Dell, until that happens, all this is a trading stock. All right, let's keep going. But one more point in favor of the company, at least for the short term, for the stock for the short term, Musk, XAI, bought a 3rd building to expand AI compute power. Okay, and you can check this article out for yourself. But what's really fun about this, from my perspective, is that I was the first person to provide proof that TSSI was doing integration work for XAI in the original facilities, right? And you got the cluster in Memphis, Tennessee, Colossus. Colossus 1 was that proof point that got me to tell you at $2 a share, we got to get in because we got proof they're doing business with Elon Musk. And now That first facility became a second facility, and now we got a third building open up, and he wants to go to 1 million chips. We just don't know who's going to do the integration for that. But the point of the matter is, AI is not dead. Is it a bubble? No, it's not a bubble. But as I've been telling you, right? So I've been right for how long now? Right? We've had NVIDIA was an official pick down here until it got up here. Okay, we actually closed that one out on January 3rd of last year. So it's been almost a year since I've been on NVIDIA. And if we zoom in on the chart, we can see that NVIDIA had a decent year. But from January 3rd of last year to now, the stock was only up 24%. If I had kept that in my official portfolio, it would have dragged down our performance, right? Because our official portfolio, the picks that we have, the last 14 picks, have averaged 92%. So that would have been an underperformer at 42% in our portfolio. Just like the picks that I closed out, delivering 44%, would have also been underperformers. So you can see how I can say I am bullish on NVIDIA as a company long term. I was bullish on these companies long term, and they continue to perform for that reason. These might be 7s, 8s, 9s on a 10-point scale, which is phenomenal. But what are we looking for to maximize our profits? 10s. And they weren't 10s. NVIDIA is not a 10. So be careful about that. The valuation is high. But as far as AI being a bubble, I told you for a long time it was not a bubble. I told you when NVIDIA was 42, it is not a bubble. I told you when it was 142, it is not a bubble. But what I'm telling you now is that with the build out that we've been seeing, that's not a bubble build out. That is what is called a build out. They're replacing old technology with new technology, and you got a number of hyperscalers out there that all want to be the winner. Okay? So there's two things that have been driving NVIDIA strongly. A complete replacement of CPUs in favor of GPUs. From Intel to NVIDIA, right? And as you can see here, life hasn't been great for Intel overall. It was really bad for a while until you had some government intervention, some NVIDIA intervention. The hopes, in fact, Intel's been around a long time. They got foundry assets, and maybe they can contribute to this AI boom, even though they've been replaced in the CPU to GPU transition. But you see what happens there? When you replace something with something else, when you get a GPU in favor of a CPU, that's not growth, that's a replacement. So what happens once all that replacement is done? Demand drops because we no longer need to replace all that infrastructure that we've built up over the last few decades. So once that happens, that's going to be problematic for NVIDIA in terms of being able to look like they're growing. They're still going to be a great company. They're still going to have a great future, but they're going to be comparing numbers against past numbers that were unnaturally strong. That's not a bubble. That's a replacement cycle. Okay. A lot of people will claim that it's a bubble in hindsight. So, listen, if you want to call it a bubble, call it a bubble. I'm calling it a replacement cycle, and it still ends the same way. Ultimately, you end up with tough comps and you end up with a stock correction. All right. The other thing is, if you've got a number of hyperscalers all trying to be the ultimate winner here, they're not all going to win. So what happens to their infrastructure if you're not one of the winners? It's going to go unutilized. And unutilized infrastructure gets resold into the market at the whatever price the market will bear, and that puts downward pressure, right? Because those losers aren't going to need to buy more GPUs. NVIDIA is going to have some hard times coming up ahead. Is it going to be 3 months from now, 12 months from now, 2 years from now? I don't know. But there is going to be another massive correction in this stock at some point. And I've already called once, twice. All right. Both of those peaks, I was somewhere in the vicinity of being correct on those. And this is the third one right here. And it hasn't really fully corrected since then. But trust me, at some point it's going to. All right. CAPE ratio, Buffett indicator, Musk AI. And by the way, Wall Street understands this. Okay? And that's part of the reason when you see what's going on out there, electricity and what? DRAM. I warned you about Micron and how DRAM was going to be a gating factor in AI buildouts. The stock was 100. What is it today? 312. It is now above the red line in my risk reward chart. Mind you, it is capable of more. If you look in the past, during periods of unnatural demand, I said that a little while ago, right? If you have your notebook and pen out, unnatural demand is what we're seeing in the AI market. It's something unsustainable. It's an initial build out, right? It's like you build a house from scratch. You buy a piece of land, you have them build you a house, boom, now you have the house. Most of your expenses are behind you, but then maybe you want a farmer's porch, maybe you want a deck, maybe you want an underground pool, and you keep spending money to keep enhancing the house that you have. Plus you got maintenance, so you continue to spend money in that house, but it's nothing compared to the initial build out. All right? What we're having is this build out that's going on right now, and that's benefiting the DRAM vendors. By the way, I warned you, if you were going to buy a laptop or any other device with DRAM in it, any device with RAM in it, buy it now. I said this weeks ago, and now go check the news and see how that advice is playing out. Prices are already rising. Laptop prices are already going up. Electronic prices are already going up. Planned gaming consoles are being pushed out because the price of RAM is going through the roof. Okay? And that is a great benefit to the companies like Micron. But when Micron hit the red line, I said, you know what? I'm switching to Samsung. And I gave you the ticker symbol SMSN on the London exchange. Not everybody can do that. I told you, you shouldn't just have one broker. E-Trade, everybody should have E-Trade. I think that is the absolute best broker out there. Interactive Brokers is a great complement to E-Trade because whatever E-Trade doesn't let you do, Interactive Brokers probably will. Samsung, not easy to buy anywhere but on Interactive Brokers. SMSN. On Interactive Brokers. This is not a commercial, by the way. I'm just telling you the truth. I ain't here to, like E-Trade and Interactive Brokers have no idea that I'm talking about them right now. I don't get paid, nothing. I'm just giving y'all the truth. This is for you, okay? When Micron hit that point, I bought Samsung. That's already up 18% since I told you that. What was that, 2 weeks ago? We weren't here last week. 18% in 2 weeks. There is the potential for Micron to keep going higher. This white line, this other white line, I mean, could it get to 577? I wouldn't be shocked because of the build out that's going on and the fact that this is one of the gating factors. This is the most desired product relative to what is available. Micron said that they, on their last earnings call, that they are more than sold out. More than sold out. Not sold out, more than sold out. Okay, so you see this rocket ship from 100 when we were talking about, now 300. And based on historical, what you see, and I've been following this company since right about, look at that, show you how old I am. Right about here is where I started knowing and covering and following Micron. And in its history, you see that? Boom. Only 2 times has it been at or above this white line. Here, that represents 378. Not much from here. And then you have that internet bubble. Okay? Will we get to that internet bubble level? I don't think so. I mean, it's a very low risk, but it could happen. So, if you've been riding Micron and you took your profits on Micron and you want to still participate in case it keeps going, I ain't mad at it. Right? It definitely can get to this white line. I think that's a good bet. I think this is not a good bet. All right, so there you go. That's Micron. I still like Samsung at these levels. Even with the 18% up, it is a better buy, valuation-wise, in my opinion, than Micron. Let's keep going. What's next on the list? Oh, so we've got AI stocks are getting smoked, right? I mean, what's interesting is that the companies that are peripheral to AI are getting hit worse. Nvidia not getting really smoked, right? I mean, it's down what? 10% off of its high, right? Oracle's gotten smoked, of course, right? You've got a number of names out there. Some of them are hanging in there, and some of them have collapsed. But the more peripheral, in other words, Nvidia, right? Nvidia is the heart of the storm. Nvidia is the poster child of AI. It is the number one king of the hill of AI. It's holding up because that's going to be the last part of the ship that sinks if the ship is going to sink. But what's the first part that sinks? Well, if you know your lessons, if you have your notebook and your pen, when a yellow alert hits, what do? Wait time names, speculative names, speculation. The companies that people speculate on are the ones that do poorly. Remember F-Tech? Look at that. Hell of a rocket ship because they thought this is going to do great because of AI. Well, that was speculation, right? And we were in the wait time. We were still waiting for them to get that great deal that they need to take off in AI, and still isn't here. We were waiting for it in June, in July, in August, in September. We're still waiting. We're still waiting. Wait time is a no-no in yellow alerts, and we have proven it once again with F-Tech now down 53% off of its highs. Another one, Techagen. Techagen was interesting to me, and I was doing the research and sharing that research as we went along, but ultimately when I completed my research, I said, whoa, I don't like Techagen. It has this familiarity to F-Tech. We haven't seen the deals. We are waiting for the deals. We're speculating on the deals. It's a yellow alert. Waiting and speculating in a yellow alert will get you killed. And what's happened to Techagen? Same thing that's happened to F-Tech. Okay? And of course, in a yellow alert, you also want to double down on risk reward. Okay? So when you get a gatekeeper, look at this, right? And yeah, we had stocks like Drone Shield that went all the way to the top of the risk reward lines. We got Kraken that went all the way to the top of the risk reward lines. We had TSSI that went all the way to the top of the risk reward lines. They don't always do that. They don't always get all the way to the top. The top of the risk reward line represents my belief of the maximum valuation it should achieve based on the fundamentals of the company when it's operating on all cylinders. Okay? And this is why I say, as the stock approaches these levels, you want to take profits. If you've tripled your money, at least take what your original investment off the table. If I put in $1 million and it triples to 3 million, you don't think I'm going to put $1 million back in my pocket? You got to be crazy. I'm probably going to put 2, maybe 2.5 of that in my pocket and then let the rest ride. As I was only willing to put $1 million into the stock in the first place. So why should I be willing to continue to hold $1 million worth of the stock now that it's tripled? You see how that doesn't make sense? To some people it makes sense because, well, you got to let it ride. That's how you get rich. No, that's also how you get poor. I mean, how many multimillionaires do you know? You might know 1 or 2. From buying a stock and holding it. Oh, I know a Tesla millionaire. Maybe you know a Tesla millionaire. But how many people do you know? It's a very small percentage of people that hit the lottery like that. And it's a sad thing to me that people rely on the lottery when you can just work with valuation. The same thing that Warren Buffett did. Warren Buffett didn't get lucky. He's just using math. Druckenmiller didn't get lucky. He's just using math. I didn't get lucky. I'm just using math. You don't get lucky 23 years straight. I've only had 3 down years since 1994. 96, sorry. It's 30. This is going to be my 30th. It's been 30 years. I've only had 3 down years out of 30. That's not luck, my friend. That's math. All right. So, that being said, you look at a gatekeeper. Look at that. You see how close it got to the top line and how it was going parabolic. That's a sign to take profits. Intermap. I mean, what do I have to tell you about that? Right? If you got your notebook, if you've got your pen, I'm not here to tell you to sell these stocks. I don't even, a lot of the times, I don't even get a stock out of my portfolio because I don't like it anymore. It graduates because too many people know about it. The cat's out of the bag. It's well known, right? I mean, really, I could take Gatekeeper and Intermap and a number of other companies out of the official portfolio tomorrow, and it doesn't mean anything negative, except for the fact that I like to invest in companies and I like to give you companies that people aren't gaga all over. Because once people are gaga over a stock, then the valuation isn't cheap anymore. If everybody's bought it, who's left to buy? All right? Use your heads if you want to get rich in 26. All right, so all that to say, we've had a massive decline in, you see, these were all kind of AI related stocks. And yes, Intermap is AI related, okay? Because of AI, the data that Intermap collects from the altitude collection equipment that they have out there for Indonesia, for Malaysia, for the US government, right? That all goes into AI databases and helps insurance companies and governments and all kinds of things. That's a positive, and it will continue to be a positive. But you have to buy stocks at the right price. There's always a good price to pay for something. And in the case of Gatekeeper, we got up pretty high here. That was a good opportunity to take profits as it was rising. So is this, right? It had moved from the green line. It was all the way down to the green line and moved more than halfway up through the risk reward channel. You should have already been taking profits in this levels. And yes, the stock is higher than it was then. That doesn't mean that it was stupid to sell some stock at these levels, because that money went into other stocks that kept going up. It diversified your portfolio, protecting your wealth, not just letting it ride and hoping it keeps going forever, because sometimes it doesn't. So, but that being said, with Gatekeeper now down, I didn't even realize it's down 40% off of its highs. What do we do here? Well, what's interesting is what's happened in this time frame. Well, it's really funny because in this time frame, all that's happened is that they've signed a bunch more deals and they announced these earnings that people didn't like. Well, let's go through this real quick. They announced 32 million in revenue for 2025. All right, that was down from last year. But here's the thing. Last year had an extraordinary contract, which was rare for them. Before this year, it was rare for this company to have a $9 million deal. Okay? But they did. And that pushed revenue to 38 million in the prior year. If that deal didn't hit in the prior year, the company would have grown 10% this year. Not exciting, but still growth, right? In a year where we saw them sign tens and tens and tens, basically $10 million per month, right? Dating back to the spring. Remember, like all through May, July, June, July, I was like coming out here almost every week with them winning another deal. Okay? And when you look at this press release, here's what we got, right? Let's boil it down. So the bad news is that the comp, right? When you compare this year to last year, it looks bad. When you compare this quarter to this year's to the quarter last year, they just put up, what was it, 11.1 million for the why isn't this even in here? Have they not updated it yet? Let's check. Let's reload this and see if they've updated this so we can see. We want the quarterly. This is important. You guys are going to learn something here and hopefully make money off of it. All right. Here we go. Boom. Beautiful. All right. So they got the 11.1, and that shows negative 4.8% growth versus the 11.6 last year's quarter. But look at all these other quarters, y'all. Do you see another quarter as in the double digits ever? That's because it didn't exist. This company never, ever had a double-digit millions quarter, right? Look, they went from 6.4 to 11.6. Do you know why? Because, right, this 11.6 is because of the 6. Because you see here, they went from 6 to 7 to 8. 6 to 7 to 9 to 9. So that should have been another 9. At least an 8. And if that was an 8 or a 9, then this would have been an 8 or a 9 or a 10, and this would have looked like a growth quarter. And what has Money Mark been telling you for all these months? That Gatekeeper has lumpy quarters. And be prepared for that. And when the stock is down on a lumpy quarter, you take advantage of that. But the funny thing about it is, this was also kind of a lumpy quarter. This quarter was up substantially from the prior quarter. It's just that they got to compare against a monster. Something that they had never done before. And that's the only reason this quarter looked lower. And here's proof. All right? We're going to speed this up for those of you who don't care about Gatekeeper. We got other stocks to talk about, and we got your questions to answer. Here's proof. They just announced 31.8 for the year, right? And people, that was a shitty quarter. 11.1 is a shitty quarter. 11.1. It was a quarter. Okay? There are 4 quarters in a whole year, correct? So in order to judge the quarter compared to a year, you have to multiply it by 4. If you do 11 million in a quarter, you are doing the equivalent of 44 million in a year. They just reported 31 million for the year. They reported 37 million last year. They just put up 11 million, which is the equivalent of 44 million for a full year. So what is wrong with that? Stupid. Are you dumb? Do you not know how to multiply by 4? That's me talking to the dummies out there panicking saying, I didn't like that quarter. Why? Why? Because the stock's down? That's stupid. Judging a quarter based on how hundreds of thousands of idiots react to the stock is dumb. I've made so much money in my life by taking the other side of a panic. People misread, misanalyze, and why not? If it takes 10, 15, 20 years to perfect understanding how to react to earnings, how to analyze the value of a stock, if it takes that much time to do it, full time, by the way, then what makes you think that you can do it? What makes you think that hundreds of thousands of people out there that got other things going on, jobs, family, etc., they don't know what they're doing? That means that those of us who do can take advantage of their foolish actions. Okay? And what we've got in this situation is 32 million, 38 million last year, $44 million run rate, and it goes deeper than that because in the press release, they said subsequent to August 30th, they had 44 million in new business contracts. So that's not a year. Remember I said 11 million is 44 for a year? Here's another 44, but it's only since August 30th. September, October, November, December. That's 4 months. That's not a year. So that's called acceleration. When you announce 32 million for a year, 11 million for the quarter, that's an acceleration. 44 million in new business in 4 months, that's an acceleration over the 11 million. And it was a bad quarter. Why? Get the F out of here. Gatekeeper margins were down. Yes. Yes, there's a question in there, and I'm going to answer all those questions during the Q&A. When you are doing 32 million of business, when you've never done more than 38 million of business in a year, and then all of a sudden 10 million of business is rolling in every single month, do you know what's going to happen? You're going to be overloaded. You're going to be overwhelmed. And you're going to have 2 choices. Turn the business away. Oh, wait. No, you're only going to have one choice. You don't turn business away, stupid. You hire more people. You figure out how to expand your business to support all that flood of business that's coming in. And what does that do to your margins? It has a negative effect. Okay? So there's a lot of things this company is going through right now as it transitions, as it morphs, as it goes Super Saiyan, right? The pain of that metamorphosis. Bruce Banner screaming as he turns into the Hulk. That's what's happening right now. Margins get hit. Profits get hit when a company has to expand rapidly. Investors cheer that when it's a unicorn that goes public and is losing tons of money but growing rapidly. But it's not okay for a company that's already established for whatever reason. Learn, folks, learn. This is the wrong move, okay? On a relative basis. Now what we have here is a 200-day moving average that's moving up. I have taken the liberty of predicting where the 200-day moving average is going to continue moving into the future. Mark, how can you do that? How can you predict the 200-day moving average? You said nobody could predict the price of a stock. That's correct. I don't know where the stock is going, but what I do know is unless the stock drops, and here's what. See, we're talking about a 200-day moving average. Do you even know what that means? Get out your pens and notebooks, kiddies, because here comes another cheat code from Coach A-Hole. 200-day moving average is the average of the last 200 days prices on the stock. Duh. Well, that kind of makes sense, right? And if you go back 200 days on this stock, do you know what it takes you back to? Just by chance, exactly St. Patrick's Day, right here, okay? March 17th, 2025 represents 200 trading days ago. And at the end of this day, whatever the stock closes at is going to be the latest day. And this point right here, this St. Patrick's Day print, will disappear from the 200-day moving average. And so the average, the 200-day average, is going to increase at the end of the day today because this print, 35 cents, is going to be removed from the 200-day average, and $1.33 is going to replace it. So the 200-day moving average is going to have a number that's $1 higher in it. If you have $1 divided by 200 days, that's what? Half a cent. So the 200-day moving average is going to move up by half a penny today, and half a penny tomorrow, and half a penny the day after that, and after that, and after that, and after that, and after that, for months. As long as the stock doesn't completely collapse in the meantime. The 200-day moving average almost cannot flatten out or go down at this point. This is how moving averages work and how you can use them to your advantage. And you can do the same thing with the 50. By the way, you see the 50 turning down. At some point, that's going to flatten out because this 50-day moving average isn't moving. These stock prices aren't moving down so fast as it was recently. If this flattens out, then this flattens out, and all of a sudden you start to see these two moving averages converge, and then the stock is going to have to decide, right? You have these support levels here, right? 200-day moving average is a big support level for a lot of stocks. And then the fundamentals kick in. And what happens if all those deals they've been winning start hitting? And all of a sudden, right, they put up, where were we? Here we go. If they just put up another $11 million quarter for the November quarter that just ended, that's a big jump from the $7 million they put up last year. They could have the same exact quarter that they just had and have it look like, because the press release will say, we put up 11.11 million, right, versus 7.28 last year. 7.28. That's 53% annualized growth. Revenues grow 53% to 11.1 million. And everybody's going to forget that they were selling the stock with 11.1 million just 3 months earlier. You see how stupid that sounds? It makes no sense. And this is the advantage that we can take when these things happen. Now, am I buying today? We'll see, right? I was hanging out with my baby, getting New Year stuff ready, resetting my spreadsheets for the new year, and I'm looking at this. I haven't had a chance to go and look, double check my math, talk to the management again, look at the charts, look at my portfolio and see, do I want to buy more of the stock at this level? I have. I bought some stock last week. I bought some Geodrill last week. We're going to talk about that. Okay, so I have bought this stock since they announced earnings, and now I have to decide, do I want to buy even more? But I'm not disappointed or my trust is broken. Why is your trust broken? What did they do to break your trust? Hopefully somebody can put that in the chat so I can answer that question of, I mean, it's hilarious to me. I'm not mad that the stock's down, by the way. I'm happy. I'm always happy when a company becomes undervalued or more undervalued. That's how I make money. If there were no undervalued stocks, I wouldn't get rich because I was taking profits along the way up. And that gave me the room to buy more if it comes down. If it wasn't for dummies, I wouldn't be able to get so rich. And hopefully you have the same mentality and join me in this way of getting rich, because it is the way. By the way, Raymond James came out positive on this. Okay? Boom. And by the way, Canaccord, who was the other book runner on the raise that they did to expand their business, hasn't initiated coverage on the stock yet. I think they will. You don't get to be the investment banker on a deal, and most of the time, without initiating coverage on the stock at some point. So, I fully expect sometime very soon, I don't know, I have no inside information, but it's just 30 years of experience. I expect Canaccord to come out with an outperform or a buy rating on Gatekeeper systems sometime very soon. Just a little prediction. I predicted that with Raymond James, and I think this report came out maybe 3 days after that prediction. All right, there you go. Hopefully that helps you, not just with Gatekeeper, but as a lesson in stocks in general. You can apply this mentality to any of your stocks. So I'm not just here to talk about my stocks. I'm here to teach you how to do this with yours. Next up, Birch Tech. Let's see what we got here. Pull up the chart. We had a move up in the stock when, coincidentally, because I tell people don't buy anything based on my word, but coincidental to me talking about this company and adding it to my unofficial portfolio, the stock spiked up. And sure enough, right, as I tell you people to be patient, don't chase moves, don't act on my information, let it sink in and then decide for yourself what you want to do. The stock's pulled back and giving people an opportunity, right, to get into the stock instead of chasing it up at these levels, which, by the way, I think is still cheap. But when a stock goes straight up like this, it's going to attract sellers. I'm sorry. When a stock goes up, what is this? 37% in a blink, it's going to attract sellers. People made a profit. People who bought here made a profit here. They're going to be tempted to sell, and that's going to put selling pressure on the stock and give new buyers an opportunity to buy in at a cheaper price. Okay? But what about these guys? Here's the update. Since my initiation of coverage, the final judgment was handed down. And what I told you was, and the stock was pretty close to these levels, all right? I think it was at, right now we got a market cap of 74 million. I think I initiated at 72 million market cap. And the award was 73 million. So I came out and I told you they were just awarded $73 million by a judge. The market cap is only 72 million. They're going to have to pay taxes and stuff, right? But they also have an $18 million recurring revenue business for pollution control in coal plants, very important, and that they were expanding into water, PFAS, PFAS, look it up, it's a big deal. You don't want to be drinking your average water. We don't drink water out of faucets anymore, not even with a filter. I just buy bottled water right now from water companies that have been proven to have very clean water. because there's just a lot of nastiness in our water. And it's known now, and it's coming to the surface, no pun intended. And you've got companies like an old pick of mine, Permafix, that I had gotten out right about, was it here, a few years ago. We had a nice ride. You see the green arrow, and we rode it to here. That was beautiful. Probably doubled our money on that. It had a long ride since then because it went into wait time. And now when the weight kind of has been lifted a little bit, right? PFAS, the Hanford facility, things are starting to kick in for them. They're doing all right, right? Not a bad stock. I'm not against PESI, but I'm not here to pick it or pimp it or anything like that at this point in time. I'm good. Plenty of people know this stock, so we don't talk about them anymore. But this company right here, people aren't talking about their expansion into the same area that PESI is expanding into. Not as a direct comp with the same solution, different solution to a similar problem. They should get similar recognition for that because they've already proven themselves in the air pollution space, winning this major judgment, right? But now moving into water, okay? Here's the update. On December 29th, just a few days ago, the final judgment came, and the number was not, I'm sorry guys, it wasn't 73 million that I told you. It was 78. 78.39715,705 to be exact. And this number gets to grow by, I think, $14,000 per day. For every day this company, the loser in this lawsuit, doesn't cut them the check, send them the money. Okay? So this number is actually moving up like the national debt. So we've got a company with a market cap of 74 million, an award of 78 million, an $18 million recurring revenue business in air pollution, and a burgeoning business in water pollution. The company is probably going to come out soon. They just did a reverse split, not a negative one. This was a bullish split. Most companies that do a reverse split is because they are desperate for money and their stock has come down so much. No, this is for an uplisting, and this is to increase its attractiveness to institutional investors, which we should expect the company in the coming weeks to roll out investor-friendly news to raise awareness for themselves. Because why else would this company reverse split? They don't need money. So if they're reverse splitting and they're uplisting, then they must be preparing an investor relations campaign, right? You don't do all this for nothing. That's a lot of work for nothing. Just to have a different stock price, that's stupid. So that's where the tea leaves are pointing there. I have bought more of this stock. Now here's the problem, right? The ticker symbol right now is not BCHT. I think it is in Toronto, by the way. So those of you in Canada, those of you with Interactive Brokers, those of you who use your pen and notebook and say, Money Mark said to get E-Trade and Interactive Brokers, I'm going to go do it. For those of you who have, you can buy this stock on Interactive Brokers. You cannot buy it on E-Trade right now because it has a D at the end of its symbol. Why does it have a D at the end of its symbol? Because it took a corporate action of doing a reverse split. And for a certain number of trading days, it's going to have that D at the end of its symbol. And that's going to make it difficult for people to buy the stock. And so you've seen the stock. Look, it's pretty hard when people can't buy the stock for a stock to go up. Well, guess what? That's pretty funny. Because if you ever tried to buy tickets to a concert, if you were part of the pre-sale, you got the tickets, no problem. If you weren't part of the pre-sale, then you're in with all the other cows rushing to try to get tickets, and they sell out like that, and then you got to pay extra on the aftermarket, right? You want to be part of the pre-sale. You want to be buying the tickets when nobody else is allowed to. And that's kind of where we are right now. And that's why I bought some more of the stock, and I will continue to buy the stock. I've been watching it and, kind of getting a feel for, how much more do I want to buy at these levels? If this thing, during the course of the show, if this dropped down to like 350, I'm buying more during the show. Okay? I'm not chasing these moves, but every time we get a little bit of weakness, I'm buying in some more because the stock is cheap. It's simple as that, right? Some people be like, oh, that was just a pump and dump. It was a pump and a dump. That's so stupid. Every situation is different. Sometimes you are looking at a pump and dump. Sometimes you are looking at a situation like what I just described to you. And this is how you make money. All right. Boom. That takes care of that. That takes care of my tabs. What we're going to do next is finish through my notebook. And then we're going to go to Q&A. All right? Give me that thumbs up if you like what you're getting so far. No sponsorships, no advertising, no nothing. Just a multimillionaire who makes over, like, when I say I make 7 figures, it's right. We're not talking $1 million per year on stocks. 30 years of experience, retired, not making one dime on anything in life. Everything I do is a donation. The only thing I make money on is my portfolio. If I coach track, it's for free. If I do the show, it's for free. If I do anything else for y'all, it's for free. All right? My life has been a lot better since I stopped taking compensation. Because guess what happens? If you're taking compensation, that means somebody's your boss, their expectations. I don't need to do that anymore by the grace of God. And you guys want that too? This is how you do it. All right, let's see what we got. We'll save that for later. That's all good. We talked about that. That's good. Two more stocks that we want to talk about, then we go to Q&A. Number one, I just got to rub this in people's faces because dumbasses out there buying a speculative wait time stock in a yellow alert, ASPI. Boom. What did I tell you? What did I tell you about staying away from this company? This was a $15 stock and now it's $5. And I don't hear people talking about it so much anymore now, all of a sudden. The same people giving me crap. Oh no, you don't understand. They're gonna make uranium. They're gonna be uranium coming out of a vending machine. Basically, stupid. And I said, I don't see the trajectory going on here. They are getting better at this, at more complex molecules, more complex elements of the periodic table of the elements, but they are a long way. And every time they produce a new element with their process, it's harder to do. It's more expensive to do. It takes longer to get there, to make it happen. Such that it seems to me, not being a scientist, it's just common sense, that it's just going to keep getting harder and harder and harder, and they may not ever be able to get to uranium, or by the time they do, it may not be important, or by the time they do, they will have spent so much money getting there that the existing shareholders will be underwater. Because that's what happens when a wait time stock is trying to get to gold mine. This is not a gold mine stock. It's easy proof. They have not accomplished what everybody's excited them for. People want this company to be able to produce uranium more cheaply. They can't do that yet. That means we are still waiting for that. That means they are wait time. They are spending money to try to make that happen. And until they actually make that happen, they're going to keep diluting shareholders, which they did in October for $200 million that they raised. And in the meantime, you've got the CEO and the CFO selling. Granted, it's on 10b5-1 programs for tax purposes. Oh, but that's still selling, right? I'm not going to hold it against them. It's not super suspicious. It's a lot of money, though. They sold 75,000 shares and 80,000 shares, respectively. That's like it's well over $1 million, maybe $2 million worth of stock that they sold in this company. All right. And as far as that $200 million that they raised, look at their market cap. It's only $600 million. They raised $200 million. That $200 million is now a third of their market cap. Why did you need to raise so much money? Maybe because you didn't think your stock was worth what it was going for? Well, that's not a shock, because maybe the CFO is smart and understands math. professional valuation math of a company that doesn't generate much in the way of revenue, that cranks out tons of expenses. Do you see these operating expenses? Through the roof. Okay? But what's funny is, over the last 12 months, 44 million, 42 million of operating income minus, right? If we go to the cash flow statement, let's see what they're burning per quarter, and then we're going to move on. But I want this to be a lesson to you guys that everybody was hype on this stock, but nobody was looking at the math and the technology and the trajectory and the fact that it was a speculative wait time stock in a yellow alert. And that's all you needed to know. Speculative wait time, yellow alert means do not buy. In fact, most of the time, you can make more money shorting a speculative wait time stock if we are in a yellow alert. It's like a cheat code. So why would you buy or own that stock? All right, here we go. Cash from operations. Last quarter, they burned $9 million of cash. So why did they have to raise $200 million? That's 23 quarters. That's 6 years of cash they raised. That should have been a clear sign for you, even as late, right? Because I was warning you long before this happened, long before October 14th, that this company was overhyped, overpriced, ahead of itself, not in a good place in a yellow alert. Where is October 14th? Right here. And when they raised $200 million, and you saw that they only burn $9 million per quarter, you had to say to yourself, this company has no confidence in its valuation because they just raised 23 quarters, 6 years worth of cash. Let me get out now. And you would have been okay. You would have been selling at the absolute high. You would have been selling at, in fact, the all-time high of this stock. And if you did, congratulations. You listened to me. You took notes and you took the right action. Beautiful. I just had to rub that in to these dummies out there who think that they can compete with a professional. I'm not saying I'm the best. I'm definitely not the best professional. I'm not even the best professional I know. Not by a long shot. But I am a professional. And you are not going to put an NBA player against a G Leaguer, much less a high schooler. This is the thing. Most of these clowns are not even G Leaguers. You can look up what the G League is. Trust me, it's not the NBA. Hint. All right, last one before we go to Q&A. Geodrill. All-time high. New all-time high it hit. Breaking through the resistance. Let's see if it holds this time. I keep buying this stock. Why? Because my confidence in it has continued to increase. You see this consolidation pattern? What's a consolidation pattern? If you've been taking notes, you know what it is. It's when a stock basically goes nowhere for a period of time after going up dramatically in a short period of time. We made 53% on this stock in 6 weeks back in the spring. This safe, boring stock, 53% in 6 weeks. And then what happens? After a big move like that, a stock tends to consolidate. Okay, I took some profits. Hopefully you took some profits. I mean, look, it hit the top of the technical line. We were up 53% in a few weeks. I took some profits. I've been telling you about this stock long before this, and I told you to back up the truck here, right? I backed up the truck here and was taking profits here, buying here, taking profits here, buying here, taking profits here. All, it's easy. It's easy. Buy low, sell high. Especially, here's the trick. Buy low, sell high is easy when you know you're buying a good stock at a good price, and that's the missing link. Nobody knows what a good price is. Is 270 a good price for Apple? I don't know. I haven't analyzed Apple in years. If you don't know the answer, stay away because you don't know what you're doing. You got to find somebody who does, that meets those 3 criteria I told you about earlier. But anyways, let's get back to Geodrill. The consolidation pattern, it's been, let's get that out of the way for a sec. Since that pop right there, it's been 7.5 months, right? 7.5 months. And up here about 5 months, bumping up against this resistance, right? This little ceiling. And as these months have gone on, the company's fundamentals have gotten better and better and better and better. And we've been able to pay the same price basically for 7 months in a company whose fundamentals keep getting better and better and better. That's called operating on more cylinders. If a company is operating on more cylinders, but the price doesn't go that way, that means the bargain is bigger. Write it down. And that's the case here. And that's why I continue to buy more shares. By the way, I'm breaking the rules. I'm breaking my own rules. I own more of the stock than the rules say I should, partly because it's still trading below the tangible book value, the street book value of their drills. Now, I don't feel like I'm risking anything. I'm just paying a cheaper price for their drills than they pay for their drills. When they go buy a new drill out in the marketplace right now, I'm paying less for the drills they own than the drills that they're adding to their portfolio. I don't see how I can lose in that environment where we've got gold at all-time highs, silver at all-time highs, copper at all-time highs. And more importantly, here's the news for this week. Okay, and this is why I think the stock is finally breaking out, and I think it should hold, right? I think, okay, will it test this resistance level? Because the resistance becomes support if it can hold it. If the stock continues higher, the resistance will become support, and then this stock may never go below this line again, not in this industry upcycle, okay? And I'm betting that that's going to happen, partly because what we saw is the latest data for investments in gold exploration, okay, hit a new record dating back. It's not a new all-time record. It's the since 2012. The last time, look at this. See what happened in 2012? It was a peak. This was the peak of investment in exploration, the peak, okay? And then the industry went into a down cycle because what's the peak? The peak's the highest it can go. Investment in exploration was as high as it could go. And as exploration investment declined, so too did demand for exploration drillers like Geodrill. But what's happening now is we just had our first quarter of big investment. Not peak, the first of what should be many strong quarters of exploration investment. So this company stock has been doing this. The company has been giving us great quarter after great quarter after great quarter. The fundamentals have been getting better and better. They've been adding more and more drills. They've been winning more and more Newmont mining, right? Tier 1 companies. The copper miner in Chile that I told you about, Atex, whose stock has done very nicely for us in the time since I told you. Up 100% year over year. I only told you about it several months ago, so it's only up 58%, I'm sorry. Right? That's a customer of theirs. Newmont, customer of theirs. These companies are rocking and rolling, and it's the investment in new exploration, not just getting the gold out of the ground. New exploration is just starting to take off. And until that exploration investment money peaks, reaches a point where it starts falling, owning the stock, and it's $4 in Canada. I'm sorry, I can't show you the US chart. This charting software doesn't give it to you, but it's GEODF. This stock at 4 Canadian, I think, is going to 6 in due course. Not tomorrow. I reserve my right to sell a stock if I want to, right? I highly doubt I'm going to sell any shares. I'm more likely to buy shares, but I want to reserve my right, and I don't want you to act on anything I say. Like I told you at the beginning, covering my, you know what, right? But that's what we're dealing with, right? Oil prices remain low. Gold prices remain high. Gold is the revenue. Oil is the number one expense. So when your revenue is high your prices are high and your cost is low, the profits go through the roof. When profits are through the roof, you want to drive more revenue. You drive more exploration, you drive more drilling, and that's why roughly half of all exploration investment dollars goes into drilling, goes directly to companies like Geodrill, and it's just now starting to perk up. Boom. All right. And by the way, just one more thing. I warned you about Bitcoin. Okay. If you are going to buy Bitcoin, this is probably a good place for it because you see where it is in the chart. But look what's happened. I told you that governments were not going to allow Bitcoin to get too big. And no, they haven't outlawed it, although a lot of countries did. Right? That was my prediction, and it came true. A lot of countries did outlaw Bitcoin, but you can't stop Bitcoin. You can't stop it. So the best thing to do is beat it. Don't even make it illegal. Beat it. So that's where Tether comes in. Stable coins, gold, silver. These are all now hotter currencies than Bitcoin. That's why Bitcoin has gotten crushed, because people around the world, forget about the US, right? We're in the United States, and in the United States, there's still Bitcoin, Bitcoin, Bitcoin. But around the world, no. People don't like Bitcoin as much. They didn't have another choice before, but now they do. They've got gold, they've got silver, and more importantly, they got stable coins, which the US, with the Genius Act, gave so much power. And since that time, you can see the Genius Act was signed right about here. And that's the last time we saw Bitcoin anywhere near these levels, because stable coins are taking over. Gold and silver obviously has taken a lot of, right? So be careful with Bitcoin, because I think things have changed for Bitcoin. That doesn't mean it won't go up, but it's not what it was. I don't think Bitcoin will ever be what it was again. The price could go back to where it was, but it will never be what it was again. It was really kind of the savior for people around the world outside the United States that wanted to protect their currency. All right, let's go to Q&A. Hope you've enjoyed this. Oh man, we're at 3:20. Man, that's what happens when you take a week off. I've been on fire today, y'all. So listen, if you enjoy what I've been telling you, and you enjoy that a multi-decade professional is not out there on Wall Street helping the fat cats, not here charging for subscriptions and all that for premium services, blah, blah, blah. Just give me the thumbs up and tell your friends and family that there's somebody here giving you the real, because that's all I'm here. 2 hours a week, donating my time, because what kind of a-hole would I be if my mentor gave me years? He gave me years of mentorship if I didn't come back and give you 2 hours a week. That's all it comes down to. I feel like I get hit by a bus if I didn't do this. So don't thank me, by the way. Don't say I'm a good guy for doing this. It's selfish. It's selfish because I don't want to get hit by a bus. I believe in karma. That's why I'm doing this. Selfish. Anyways, let's go. Let's go. Q&A. Happy New Year, Mark. The Toronto Transit Commission is opening 2 new lines this year. Would something like this be a catalyst for them to expedite bidding process and surveillance that Gatekeeper provides? I don't know about expedite, right? Because if they're planning new train lines, they've been probably thinking about that for a while. And if you've been thinking about that for a while, then obviously the trains are going to have security on them. Toronto obviously doing business with Gatekeeper already. So yeah, I mean, if you want to say, is this an expansion, an opportunity for expanded business for Gatekeeper in Toronto? Yes, clearly, right? By the way, thank you for that. I'm more happy with you providing that information because that's even new to me, right? So thank you for that information. But the answer to your question is actually really simple. That's just obvious. So let's see what we got here. You were expecting the BCHT reverse split. I wasn't expecting it until it was announced. And then I was expecting it. And even then I was still like, okay, buying it. I don't care. Like, I didn't know how the stock would act. I didn't know the stock would pull back. Or I didn't know off the top at the time. Now I know. But I didn't even know that a D would be added and it would, the trading would be difficult for a while. I don't care. So this is the thing. You guys can play those games if you want. I've got a daughter I'd rather spend time with than sit in front of the screen all day trying to guess where the stock's going to be tomorrow. I make a lot more money, a lot more easily by not being in front of this screen all day, every day. When I get in front of the screen, it's to find out, to calculate, to do math, and figure out what a stock is worth. And when I did the math on BCHT, I said, this stock is cheap. I'm going to buy it, and I don't care what happens tomorrow, next week, or next month. The stock is cheap, and at some point, it's not going to be cheap. And this is the thing that a lot of you guys lose out on, is because you're listening to the other 10,000 idiots out there, and you get winning picks and losing picks and winning picks and losing picks. And you learn from the losers how to be fearful, how to be scared, right? But look, and this is me. I'm talking about me right now. Not for your sake, but me, inside of me. Inside of me, right? I am saying to myself every day, damn, Mark, by the grace of God, you have not picked a loser in your official portfolio since May of last year. So if you pick a stock and it goes down, do not question your research. Do not question your math. Question the idiots that sold the stock down to that level and buy more. Because at some point, the idiots are going to realize that the stock should be higher. And if they don't, the institutions will. And if they don't, some bigger company will come and acquire it, and you will make money, and the idiots are going to say, God damn it, I used to own that stock. I wish I didn't sell it when it dropped. And you're going to have another $1 million in your pocket, and they're going to have another loss. That's going to continue to perpetuate the psychology of being afraid when a stock they buy goes down. Do you know how I know that? Because I used to be that idiot. How do you think somebody lost 3 years in a row in a bull market? 1993, 4, and 5. I lost money all 3 of those years. Almost impossible. Not if you are selling a stock when it goes down and buying a stock when it goes up. I was chasing winners, and then they would go down and I would sell them because they were going down. It's going down. It's probably a bad pick. It's going up. It must be a good pick. I was buying high and selling low. How dumb. 5 years of college or 6 years of education for that. Because you didn't learn to trust the math. Any thoughts on Gatekeeper? My friend, I haven't seen you ask questions on this channel before, but I'm going to take a note of your handle, because every week, and write this down, every week I'm going to come here and tell you everything I know about everything I know. Okay? So if there is something to be said about Gatekeeper, I'm going to say it. If I have any thoughts, I'm going to give you those thoughts. If I don't have any new thoughts, you're not going to hear any new thoughts. And therefore, you should never ask me the question, do you have any thoughts on XYZ? MBJ knows this. Talk to him, MBJ, in the chat. And Zach, Ancestor Rush, see, the veterans, you guys are getting it. See, this is what makes me feel good, is to see the veterans here. Some of you, like MBJ, I remember, MBJ, you were definitely at least once a dummy of the week. And now here you are telling he's not a dummy. I'm not going to call him a dummy. We're going to say he's a novice, like he's new, he's a rookie, right? He's an up-and-comer. He'll be a dummy if he does it again. But you're teaching now. You went from dummy to educator. This is how you get rich, folks, by learning these lessons, like these guys, former dummy of the week, now educator. Now what do you think he's doing? Do you think he's making dummy moves or educated moves? Do you think he's getting poor or are you getting rich? We can all do it. If a dummy of the week can do it, so can you. Let's keep going. Do any metal companies pique your interest for 2026? Stay tuned. Okay. You also may be new to the show. I don't do things that way, right? I do look at metals companies. I do look at different stocks. They're not a high priority because it's not my expertise, right? Although occasionally we'll find something. But look, the bottom line is I'm looking for stuff. And when I find something, I give it to you. It's interesting because it makes Q&A kind of easy. The Q&A should be details on stuff that we've already discussed, not, do you have a new pick? Are there any companies that you're interested in? Yeah, well, if any of that is true, then I will give it to you. You don't have to ask me. I will give it to you in the first hour of the show. That's why Q&A comes after the first hour, because the first hour is where I tell you everything, and the second hour is where I answer questions about all that stuff. No offense to you, by the way, because I haven't seen you ask any stupid questions before. To uplist, it has to trade above $4. Does it need broader ownership besides insiders? That's a good question. I don't know the answer to that question. I don't worry about it because to me the stock is undervalued. So I think that's all I have to worry about. It's getting warm in here for some reason. Maybe because money mark's on fire. Let's lighten the load. Whew. There we go. And yeah, so I don't know the answer to those questions, but we'll try to find out. But I'm not too worried about it because the stock, if it needs to get to 4 from 378 or even 5, right? I actually questioned why they didn't do a bigger reverse split. I would have done like 1 for 10 and split the stock up into the 7s or 8s. Then you're above 5. You're above 4, you're above 5, everything's cool. I think this stock is going to get there, and so I wouldn't worry too much about it. All right? But it's a good question. When you begin coverage on a company, what type of questions do you typically ask the IR department? That's education, Zach, and I don't do education on this show. But the short answer is I ask whatever questions are relevant for that specific company at that specific time. There's not like this 10 question checklist that I have. Every stock is different. They're all snowflakes, and I address them all specific to what we're dealing with. Right? You say, well, what do you ask an NFL player when you meet one? Well, is he a running back, a wide receiver, a quarterback, a middle linebacker, a defensive back, the coach, the kicker, the punter, the long snapper? Right? It all depends. Confused about your Google Sheets for VCTHD. Are you going off the Canadian price or the current price? Look, let me see here. Yeah, I mean, I don't know what's going on with that. Oh no, that's IZ. Let me see what's going on here. Yeah, that's wrong, clearly. Let me do this. Let's see if this, see this, it wasn't working with the D before. Pause. Now it's working. All right, so there we go. That's still the wrong price, so I don't know what's going on. Who cares? Who cares what the stock's up or down, right, in the spreadsheet? All that matters is real life. Okay, the spreadsheet will take care of itself when the ticker symbol takes care of itself. But thank you, Nader. I did need to put the D on the end there. Pause. If you know, you know. Gatekeeper, when might we expect the fiscal 26 contracts of 41 million revenue to get recognized? It's all going to be different. I think some of those deals are going to get recognized over the course of the next 2 years. Right? Some of them get recognized this year. The important thing to remember is this. If they are on a $120 million run rate in terms of winning business, if they're closing $10 million of business per month, and the CEO has told us that they have a $70 million deal in their pipeline and a $100 million deal in their pipeline, that's 2 deals worth $170 million. That's 17 months of $10 million per quarter, right? All that business, a lot of that business has to be completed by the FRA mandated deadline of October 2027, which is 12 months and 10 months, 22 months from now. Okay. So all that business plus all the business that they're going to sign this year, like they got a backlog now of business and they have more business flowing in, apparently faster than they know how to handle it. right? So you got the Wall Street report that I had out there. It's not up there anymore. Did I? Here we go. What is the Wall Street estimate? And you know these Wall Street estimates are made to be beaten, right? So we've got an estimate of 45 million for 26. That is like what, 43% growth? 45 divided by, hey Siri, what's 45 divided by 32? It's approximately 41% growth. That's 41% growth. And then 67 after that. Hey Siri, what's 67 divided by 45? That's another 49% growth. Those are the kind of growth numbers we're looking at for this year and next year, over this year, right? And people are all freaked out over this 32. Hilarious. And these are presumed to be conservative numbers, which makes sense because if you add 45 and 67, see, there's some logic here. 45 plus 67 equals 112. If they are closing business at the pace of 10 million per month, 12 months in a year, 120 million per year, if they're closing $120 million of business per year, I'm not saying they're going to keep at that pace, but if they do, how are they going to only do 112 million over the next 2 years? It's just mathematically doesn't work that way. It's just the law of mathematical physics. Can't work that way. Let's see. George, oh my God. I know you're new, but I have to make fun of somebody. I need to yell at somebody. And I'm going to do it for you. Not because you asked one dumb question, but you asked a dumb question and you didn't follow instructions. That's 2 times dumb, right? If you did one dumb, everybody gets grace. So you already got your grace, right? Because you didn't follow instructions. That was dumb. But then you asked a dumb question. So now I'm going to give you the dummy treatment. At what level will you sell Micron? I just joined. Are you stupid? Like, look, you just jumped in, right? If you joined at the beginning of the show, then you heard me say the instruction manual for this show is to listen to this, read this, and watch this for your sake, right? When you get a new toy, you read the instruction manual. When you get a new machine, do you put your hand in the machine, plug it in, and turn it on and see what happens? That would be dumb. And that's what you just did. You didn't read the instruction manual and decided to start playing with this machine. That's stupid. Don't do that. And just know also, by the way, George, if this is your first time on the show, that this is called the dummy treatment. It's meant for entertainment purposes only. Don't take it personally. Hopefully you won't go away. Trust me, there's a lot of people. In fact, I'm kind of curious. If you've gotten the dummy treatment in the past, give me a hell yeah in the chat so George can see that he's not alone. Give me a hell yeah in the chat if you have gotten the dummy treatment at any point in the past. Bro, we don't do that. Go learn. All right? From this chart, you should know the answer to that question, and the fact that you don't tells me that you didn't read, listen, and watch the instruction manual, number 1. Number 2, you didn't follow instructions by putting a question mark at the beginning of your question, and Nick Harold knew that this was coming, and TK Static knew this was coming, because immediately after you did that dumb thing, they were laughing. And then you did it again immediately after, but I won't give you any more dummy treatment over that. I'm just going to feel better that I gave you the dummy treatment that I just gave you because you deserve it, stupid. There's nothing I love more than calling somebody dumb and then realizing that I was right. Because I feel bad when I call somebody stupid and find out that they're not. But this time, I win. I know you have not discussed this on the show, but breakout invest. Oh my God. I'm going to keep going before I throw my hat at the screen. Any idea why there have been no contract announcements for Gatekeeper over the past 3 months? The first part of your question is stupid. The second part of your question, if that's all you had said, it would have been a very good question, Chow Chow. My friend, look on the screen, my friend. 3 months. September, October, November, December. It's been 4 months. Okay? So if we turn the 3 months into 4 months, they say in this press release that I read for you, you dumb. What do you should, are you deaf? Are you literally deaf? Are you watching this with subtitles and can't read? Because I said 44 million in new business contracts announced subsequent to August 31st. So while they haven't announced any specific deals, they announced just a few days ago that in the past 4 months they've booked $44 million of business. As for the smart part of your question, if they received contracts in those 3 months, why would they not announce anything? The answer to that question is I don't know. It's a good question, but the answer is I don't know. I'd have to ask them. I don't particularly care because I now know that they closed $44 million of business over the last 4 months. I don't care if they put out a press release about who it was and what it was and all that stuff. I'd love to know, but I'm not going to preoccupy myself. Well, they got to push the stock up. My stock's going down. Good. I hope it goes to 2 cents because then I can buy millions more shares. Millions of dollars more shares from the dummies selling it at that price. Because they didn't put out a press release lately. The company must be dead. They didn't put out a press release. The F out of here. Gatekeeper margins were down. Are you worried they accepted lower margins? No, I'm not worried about that. I'm not worried that they accepted lower margins on large contracts and won't be profitable anytime soon because those large contracts haven't been executed against yet. Okay? I gave you the reason why those margins are getting hurt. It's temporary. Chill out. Relax. Look at this guy. He puts $2 in front of his question. If $2 equals a question mark, then what does that make the Riddler? That's my question. Next question. Look at that. I like this. KRMD chart, please, politeness, legitimate question, and then offers me a happy new year. Beautiful. There's your KRMD chart. And a happy new year to you. And thank you for allowing my blood pressure to settle back down after that. Woo! Look, if all y'all are newbies, thank you. Welcome. Welcome to the real world. You have now been unplugged out of the matrix and you are in the real world. You are getting the real education. You are getting what you need to hear. Okay? And I'm not going to back down from that. Can you handle it? Can you handle the truth? Because if you can, then welcome. You are on the Nebuchadnezzar and you are going to make money. If you can't handle it, go back into the matrix, eat your fake steak, and have a nice life. In La La Land. Money Mark, what is your New Year's resolution goal? Jackie, thank you for asking. Thank you for caring about me personally, but we got too little time to answer that question, and I don't answer personal questions. I volunteer at times, but we're about 2 minutes away from the lightning round. But thank you for asking. I know it's not official, but do you have valuation lines for? Okay. That's a fair question because I have spoken about Broadcom in the past, and he's asking if I have any lines on the chart. And look, I happen to have lines on the chart. I didn't even know the answer to that question myself. Part of the reason, though, like, here's the thing. I will give you a little bit of a beating on this because these can't even speak. These, my boy Gus would have given me, he would have, you just can't do that. This is Sparta. Mega caps. You can just draw lines over the tops and bottoms, and that's pretty much the risk reward lines. Okay? Oracle, IBM, Microsoft, any of these see these companies that have been around a long time and have mega capitalizations? The reason that you can just draw lines over the long-term tops and bottoms and that equals risk reward is because you literally have hundreds of professionals that have been taught like me. Now, maybe not to my level because they're still working on Wall Street. They're not retired. Those are the G Leaguers, by the way. To me, Wall Street analysts are G Leaguers, right? My colleagues, the retired multimillionaires that don't have to work, don't have to put on a suit and sit in a 30-story building in New York City, that true freedom, we're the NBA players. The Wall Street analysts, those are the G Leaguers. And then there's the rest of y'all. So you can just guess. If that's the G League, then what's everything else? But you got 200 of them analyzing Microsoft, doing the math on Microsoft. And as a result, Microsoft, anytime Microsoft gets cheap, Fidelity, Capital Group, any of these large institutions with billions upon billions of money, are going to buy the stock, right? Look at this chart. Look at this Microsoft chart. Every time it hit the 200-week moving average, it's been bought. Going back since this is the last time. The real estate, the financial collapse is the last time that the 200-week moving average hasn't been bought on Microsoft. It gives you pretty, like, you could almost, right, put another line right there under the 200-week moving average and just say, there's your risk reward low line. In fact, I'll do that. What the hell? Why not? We'll make it a light line. The 200-week moving average is proven to be support for this stock. Why? Because that represents a bastion of value. In order for the stock to get down to that level, it has to drop 34%. A 34% drop on a stock like Microsoft is something that institutions are going to buy in on because the valuation's too low. That makes it pretty much a risk reward line. So for any mega cap stock, you can draw these lines on there. The problem is you need to know that that mega cap stock is going to continue being a leading company and not run into long-term trouble like a GE did at one point. That's so funny. Look at that chart, right? They are so lucky AI came around. That's amazing. Here we go. Right? If you were buying GE up until 1999, you thought you were some kind of genius following the risk reward lines that existed before then. Just like back then, GE could have been bought on dips. There were your risk reward lines. And I shouldn't be doing this during the lightning round, but boom. This is what GE's chart looked like before 2000. And then until this time, right, you could have bought at near the lows and sold near the highs and you were doing great. And then when it got down here, you could have bought and said, man, I just made a great purchase. But that wouldn't be true because why? Because you didn't understand the company. I don't know GE. I've never known GE as a company. I've never been able to tell you what GE is worth. So I couldn't validate that these lines were going to persist into the future. And sure enough, they didn't. Because the company ran into trouble and the lines broke and the stock went down, down, down from 295 to 20 before now, finally, if you bought way back here, you're finally in the green. A whole 0.46% per year, right? So, anyways, sorry for that tangent, but y'all, I'm in a lesson giving mood today. Lightning round, let's go. We're going to answer all these questions quickly and call it a day. I've read a theory. Next question. What do you think about the current situation with Curie and Isaiah? I would have told you if I had anything new on it. I like them both, period. Happy New Year. With no announcement coming from Intermap at the end of the year, do you think the odds of Indonesia deal have dropped drastically? Why? It was just a delay. Indonesia's taking more time to make its decision. Why would that change the odds of them winning? Curie chart. And how many cylinders are they operating on? That's a good question. I don't really know. I need an update from them on how many cylinders they're operating on. I assume they're operating on a lot of cylinders because AI video is hot. And if AI video is hot, then their business for brokering deals with video content providers to hyperscalers should be doing great. Why the stock's down, I don't know. But that happens. We want that. It happens a lot. And that's how we make money. We make money when this happens. So we actually hope for it, and it happens a lot. Thank God. I'm confused about a pick with no lines. Ask me about that next week. I mean, yeah, I get it. You got a good point there. I had to put the pick out when I did because the award came down. This is solid. Let me see. I'll make a note. Risk reward lines. That was legit. See, I didn't call you dumb so quickly. Thank God, because I'd have been wrong. A lot of your old broadcasts have disappeared. Do you know what happened? Yeah. Some of them I deleted because I want people to take notes. Right? I don't want you to go back to my old broadcast. Just take notes and go into the future. One. And two, some of them got deleted by accident. That's the way the cookie crumbles, right? I like to keep my broadcast, like the history clear. I mean, really, do we need 100 2-hour episodes of this show out there? Do you guys really watch those? You shouldn't. You shouldn't. You should take notes, okay? And keep up on the stocks that you're in. And then you don't have to worry about whether a show, gets deleted or not. I mean, this guy's on a roll with good questions. Do you have any recommendations of other people to follow on X? I don't. Iridex and Infu charts. Good Lord. Notice that the lines are not colored. How many cylinders is Iridex on? Not that many, in my opinion. But that might change soon because they have an upgrade cycle coming. Once the upgrade cycle begins, then I might be interested. It's coming, but it hasn't begun. If customers are thinking to upgrade because a new upgraded product is coming, then wouldn't it stand to reason that they might stop thinking about buying the old product? So when a salesperson goes, hey guys, you want to buy some more product? No, that's your old product. We're just going to wait for the new one. Right? I'm a little concerned about that. I'm not saying it's a big problem, but it could be a problem. I'd rather wait until the new product is out and selling. BCHT is not a speculative pick. Whoever said that, Steve? Sit down. Do you think ARAAF could become interesting again at some point again in the future? Yes, of course. Anything can become interesting again in the future. Are you aware if Gatekeeper does or if they're planning to branch out their AI security surveillance technology to other businesses other than i.e. retail surveillance? Not at this time. They don't need it. And then this guy, this idiot, we have our first troll of the year. We have our first person who mommy didn't love enough, and now he gets enjoyment by causing pain for others. But it doesn't bother me at all. It just makes me feel bad for you. It feels bad. I feel bad for you, my friend. I hope God grants you some solace in life so that you don't need this sort of attention. I really feel bad for you. So your posts have been deleted, so nobody else will see them. I won't see you anymore, but because you're not my problem, you're your mommy's problem and your daddy's problem, and your mommy and their daddy are obviously your problem, and you need to fix that, and I hope you do. I pray to God for you, and God rest your soul. Are you aware if, let's see, next question, how do you know when to sell? Please go read, watch, and listen to my educational materials, and you'll learn much more about that. Trust me, I guarantee it. Um, yeah, Daddy, you didn't need to respond to him. Just you guys know when a troll comes into the show, ignore him, and I will ban him. The thing that trolls hate the most is being ignored, or second most, because they hate being pitied, and I do pity them. Right? He's gone. No big deal. The show goes on. BCHT plans to list on the New York Stock Exchange, and the requirement is only $2. That's fine, but institutions still sometimes have a requirement of $5. So I would have rather. Oh, look at this. And somebody else thinks that 1 for 5 was the max allowed from a previously stipulated arrangement. Look at this. See, this is another reason why I do this, by the way, right? Because the 10,000 people that follow this show are not just followers. A lot of them are contributors. Thank you guys for contributing this insight into what's going on here. And I am now smarter. As we approach 4 o'clock, I am going to be a more intelligent, more informed investor thanks to you. See, so it wasn't all talking. Now I've gotten some information, and that's going to save me time. Now I don't have to go and find those answers. They came to me. Thank you, guys. See, this is what we do it for. You could be a dummy or you could be a contributor. Take your pick. Let's see, any more question marks? Any thoughts on the accelerated bonus compensation for the CEO in the best interest of shareholders? Steve, that is the $64,000 question that I'm trying to get answered and haven't been yet, because the CEO is on vacation in Mexico as we speak, unless he just got back. But we got to get the answer to that question, and we will. All right, we're going to figure that out. Can you show us your model for Gatekeeper and Kraken? No, not at this time. I show my operating model when I feel like it, not on command. And one of the reasons is because first of all, it's proprietary to me, right? So I don't want to give away all of my, right, advantage, because now this is out there for 10,000 people to be armed with the same information as me. And that lessens the chances of a dummy move in a stock. And that lessens my chances of making money. I'm actually sacrificing money to an extent by giving you guys all of this, dropping all these jewels for you guys, right? And so the offset to that is I got to keep some of the 11 herbs and spices for myself. But I do share them. You do see them show up on the screen. And what you ought to do, notebook and pen, take notes, take a screenshot, put it in your notebook so that you have those things, so you don't have to ask me, so I don't have to say, nah, man, not going to do it. Not this week, at least, and certainly not on command. We got a question without question marks at the beginning. Somebody said I missed David Depto's question. Please answer. I don't know what the question was. You should have re-asked it. Don't make me go through. Do you think you think everybody wants to watch me take time and scroll through looking for David Depto's question to answer it? Did it dawn on you to ask the question? Bro, like, y'all are off to get a cup of coffee or something, because it's 2026. It's January 2nd. This is how you're getting started. This is your start to the year. In my culture, I'm Cape Verdean. These are islands off the northwest coast of Africa. I grew up, my grandmother telling me, as goes the beginning of the month, so goes the end of the month. As goes the beginning of the year, so goes the year. Y'all ain't lining up for a good month or year with, come on, bro. Come on, man. Um, I'm going to give you a chance to put that question, or David a chance to put that question, is because we got 60 seconds left. And because of that, I'm going to entertain a question that didn't have the question mark at the beginning of it. Sorry for being late. I saw IDN's site has the Meta logo listed as a current customer. Do you have a recent chart? Apologies if you already showed it. See, that was great, except for the question mark not being at the beginning. He put a lot of question marks at the end, though, so it did catch my eye. So mission accomplished, even if it wasn't exactly the way it should. There's your chart. And thank you for the information about Meta's logo being on their website. Though we do know, but wait, I don't know if we knew that Meta, I don't know if they had made it public that Meta was a customer. We just knew it was because we do research. Anyways, there's only a few seconds left. I doubt that question is going to get posted in time. And we call the show at 3:55 anyway, so I went overboard. That's cool. I won't be able to make any trades before the market closes. That's all right. I don't think I was going to make any anyways. But hey, I hope you guys enjoyed this. You veterans, you already know what it is. All right? Ain't a damn thing changed. Here's David's question. Oh, the conditions for Gatekeeper CEO getting his $1.6 million bonus for the three. Yeah, it's really interesting, y'all. I mean, that bonus was supposed to be for either him being released, him quitting, or the company change of control, meaning pretty much getting acquired. So why would they accelerate? Are they planning on firing him? Are they planning on him quitting? Are they planning on selling the company? And I haven't gotten an answer yet. And I'm wondering if there is a good answer to this question. We are going to get to the bottom of this, or they're going to have skepticism all over their faces. So if any of you all talk to the company, let them know that a lot of people, like, you can't just brush this under the rug and say it's good for shareholders. How, Doug, is this good for shareholders? Maybe it is, but please let us know how. And maybe we'll have the answer next week. I hope you guys have enjoyed this first edition 2026. We had a phenomenal year last year. You saw last year's picks up average over 100%. We're going to keep trying to do that. If you average 40% a year, every year you double your money every 2 years, and that turns 10,000 into 1.28 million in 14 years. And then you're a millionaire. And then you can double that in 2 years, and then you're a double millionaire. You could double that in 2 years, and then you're right. And that's how you end up making 7 figures a year and buying a penthouse in Miami Beach, like Money Mark, who comes here every week, Friday at 2 p.m. Give me that thumbs up, and see you next week, Friday at 2 p.m. Happy New Year. Have a good weekend. Take care. Good feeds. NBCHT. We can put some preliminary risk reward lines in here, by the way, because number one, preliminary, but I mean, the stock shouldn't go like this is the thing. And then we need the right slope, annualized. Can they grow? This is all preliminary, y'all. This is not how we really do it. You do math, but I can just put some preliminary lines in here so I at least have some lines. And then that is the rough growth rate I could expect preliminarily, 12%. So we need to put a top line. We'll start here roughly, and okay, so where's the bottom of this one? $3 with all that cash coming in. Maybe we do this just to be safe. That's a good starting point for y'all. That's just a starting point based on what I have done. There's been a lot of research done on the stock, so don't think that I just drew these lines out of nowhere. You see, they don't seem to map to anything else on this chart. But that is your kind of preliminary BCHT risk reward lines. Stay tuned to see if they turn bright white, which will mean that I'm more confident in them. And then, of course, red and green. That's when I lock in and say, yeah, these are for real the risk reward lines. All right. So there you go. Okay. Good enough. All right, so that takes care of that for now. Lights out. Pen, notebook. Log off.